All right, guys, ready to get back to work tonight? I hope so. Weekend's over. Time to get back to work Monday evening. It's May 17th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me because my job tonight is to help us find the best trade setups for tomorrow. That's Tuesday's trading session. I got a jam-packed video in store for you guys and gals tonight. Charts are all prepped up in the background, as you can see. Got the S&P, Nasdaq is ready, and gold is on our radar for tomorrow. Boy, lots of great setups we're tracking for Tuesday's trading session. Got some ranges on the Eminis, got some trends on the gold. We're thinking fake outs, we're thinking breakouts, we're thinking pullbacks, maybe some reversals between you, me, and the rest of YouTube here. Got a bunch of great trades though on my radar for tomorrow. Not to worry, by the time we're done with tonight's video, my favorite setups on all three of my favorite futures markets. Before we jump in, then we'll get our hands dirty tonight on this video. I just want to make sure to remind you guys, make sure you subscribe to our YouTube channel. I publish this video newsletter every evening, my best trade ideas for the following day. I don't want you to miss tomorrow night's video, so make sure you subscribe to our YouTube channel. And when you do, don't forget, hit that little bell icon so you always get notified every time I publish something new. And guys, you can always type your questions. And if you have any questions, just type those questions right in the comments section. I would love to get all your questions answered. Don't be afraid to ask questions. And as always, if you guys tune in every evening, if you enjoy this video as much as I enjoy making it, do me a big favor, hit that like button, hit that thumbs up button here for us on this YouTube video. Always appreciate you guys tuning in every evening. So please don't forget to subscribe. I don't want you to miss the rest of this week's newsletter this week. Hit those questions in the comment section and thumbs up if you guys enjoy the content here tonight on this video. But enough of the intro. Time is ticking. Tuesday is right around the corner. The third week of the month of May. I can't believe it. It's going to be Memorial Day weekend before we can blink here. Boy, where do I begin here tonight? Got a couple ranges. Got a couple trends, actually two ranges, got one trending market as we go into tomorrow's trading session. I've got the S&P range bound, right? Got a big juicy range on the S&P. Got a range on the Nasdaq. Whenever we're thinking ranges, we're thinking failures and we're thinking breakouts, right? We're talking about buyer failures, seller failures, and breakouts of that trading range on both the E-mini and the Nasdaq. They are very similar, but they are quite different. You'll notice the S&P right now is above the range. The Nasdaq still has a little bit more to go. So again, we're thinking failures and breakouts on the Nasdaq. I'll talk about these specific entries as we go deeper into this video. And of course, the gold, right? Gold is ripping, as the kids say these days, right? Ripping higher to the upside. We, of course, have a bull trend right now on the gold. Trending markets tell me I'm looking for continuations, right? Or pullbacks in this situation. I'm looking for failures, right? Or should I say reversals, right? Reversals in a bear reversal off these highs. So I'm looking for pullbacks. I'm looking for reversals on the gold. We're looking to trade those failures and those breakouts on the S&P and the Nasdaq. Got a lot of really good trades on my radar for tomorrow. Before we jump in though and take a look deeper at these charts, so let's just make sure we're on the same page here this week. Let's grab a quick look here at the economic news calendar for tomorrow. There isn't a ton of news this week, but you're going to start to probably see the Fed speakers start to creep into what normally wouldn't be we normally wouldn't be paying much attention to the Fed speakers, but everyone seems to be so obsessed right now with these rates. We saw today the Fed's boss, or Fed's Clarita today. I mean, he whispered the word tapering in his speech this morning, and the whole market tanked. So it's definitely feeling like this week, even though there may not be a lot of major news this week, the third week of the month, I'll be paying close attention to the Fed speakers, and we'll talk more about that here as we go throughout the rest of this week and these nightly newsletters. Now, of course, tomorrow's Tuesday. We get some big news tomorrow. Housing starts and permits. The housing market here in the U.S. has been red, white hot almost in bubble territory. A lot of folks are thinking that with the spike in prices of lumber and copper and all the commodities that go into these homes, this will be a bubble territory. Everyone's watching these housing numbers right now. So housing starts, housing permits, definitely going to be on our radar tomorrow. That will be the big news at 8:30 Eastern time. And again, I wouldn't normally say watch out for Fed speak, but again, the markets they've been obsessed with Fed speak lately. So I will definitely be tracking the real-time updates regarding these Fed speeches. I use a paid service from tradethenews.com in our trade room. I will definitely be watching those here this week. I've got Bostic at 11 o'clock and Kaplan at 11:05. Remember, what you're looking for here is you're looking for one of these Fed speakers to go rogue, right? Everybody at the Fed, right? Of course, the head of the Fed, Jerome Powell, right now is saying inflation is only temporary, right? They're calling it transitory. That's fancy speak for temporary, right? So everyone's worried about rising inflation. Everyone at the Fed has been pretty uniform, and they've been pretty consistent by saying it's only temporary. What we're looking for out of these Fed speakers, and it's not just tomorrow, right? It's the rest of the week this week, mostly Wednesday and then early on Friday. What we're looking for is when those what we're hoping is one of these Fed speakers will say, no, everyone else is wrong. It's time to taper. It's time to stop the stimulus, right, and slow down this economy because it's red hot, and that's what's causing, right, the prices to spike, right, inflation. So long story short, I wouldn't normally, again, be too focused on Fed speakers, but, again, we have markets right now that are almost obsessed with the idea of inflation and potentially the increasing of rates, right? The tapering of stimulus, which from most people's perspective would result in a very strong pullback in the equity markets and potentially, right, pull back on the gold, because when you take the tapering away, right, that yellow metal, that negative correlation goes away. Anyways, I don't want to get too far down that rabbit hole. We'll talk more about that tomorrow morning in our trade room. But those are kind of the big headlines for tomorrow. Housing starts will get us started. We got Bostic at 11, Kaplan 11:05. Will they talk about tapering, right? That is definitely something on our radar tomorrow in our trade room. And of course, don't forget, every morning, 8 o'clock Eastern time, we're going to trade this stuff together. I would love to have you there, right there with me. I'll put all the membership links you guys need, the description of the YouTube video. So grab that link in the description, get registered, and I'll see you tomorrow morning. We'll kick off the session tomorrow at 8 o'clock Eastern time with the front row seat for those housing starts and permits. And then, of course, we'll stick around for the end and see if the Fed speakers can stick their foot in their mouth and give us something to trade as we go into the lunchtime session. So that's on my radar for tomorrow. We'll come back and take a look at Wednesday, Thursday, and Friday's news. Make sure you tune in tomorrow night, and we'll cover the plan for Wednesday, Thursday, and Friday. Back to our charts now. So again, we have a good idea of what the schedule looks like for tomorrow. Let's get after it now here on those charts. We got a couple ranges. We got a nice juicy trend going higher here. Starting off first, though, as you can see with the E-mini on the left-hand side here, it's basically a bear market today into a trading range. Now, it's not very difficult to see if you zoom all the way out here. If I can look left a little bit here right now, right, it's pretty easy to see. We've had this very strong race higher here over the past 2.5 trading days, strong move higher. This could easily be a pullback, right? I mean, it could easily be a pullback right now if you line up that high to that low. I mean, it's not difficult to think this isn't a pullback in an overall bullish trend. And if you really zoom out a bit further, you can remember that this range, right? This range back here, this is nothing new if you guys have been following this newsletter. This trading range at 41.80, right? That is that range from really late April. And we're now, as you can see, right back up into that trading range. And there's those all-time highs up there. So, again, it's not difficult to see the overall bullishness. If I take the leg 1, leg 2 here, kind of copy and paste this over here, you can kind of see where I'm getting some of these levels, right? There's my measured move, got the all-time highs. So again, it doesn't take a very experienced trader right now to see this big move up. This could easily be a pullback and run higher. The challenge we have though is that again, today was a bear day, right? If I zoom back in on this, you can see there is very little, there's a little bit, but very little in terms of momentum right now for those bulls. So I'm not going to argue. We definitely can see that long-term bullish move from last week, but I'm not a long-term trader. I'm a short-term trader, so I'm not looking at the long-term momentum. I'm looking at short-term momentum right now. And look at this chart right now. It's very difficult to get excited about buying this as a short-term trader. Again, long-term trend, absolutely, I can see that for the buy side. But as of right now, it is pretty much a bear market into a range. Now, the key component to a range market with a bear bias in this case is the range acts like a magnet. Right? So you want to be thinking about, how can I find levels of support below? How can I find levels of resistance above to basically buy low and sell high? Right? Buying low off the support levels, selling high off those resistance levels, using that range as a magnet. When I think of a range-bound market, I think about two key types of trades. One is failures and one are breakouts. So let's talk about failures first. Now, failures are relatively, it's a relatively easy idea. In a bear market, I want to find levels of resistance, right? Like an expanding triangle or like a pendulum swing. I want to find levels of resistance up above that trading range, and then look for, again, what I call failures going back down into that trading range. It's a pretty simple strategy overall. The one thing that I noticed about this particular trading range, and it's just like this in the Nasdaq too, is we are rotating off the low of that range. Now, that may not seem like a big deal, but there's a very big difference between these two pullbacks, right? For one example, we go bearish in a range and we pop back up. I can get very aggressive selling that back down, right? Or the second example would be, we go into a range, we go below the range, and then we come back up. Well, sorry, not that far, right? But we come back up again. That's a very different environment now, right? There's no bulls on the first example. On the second example, though, there's a lot of bulls coming off of that low. So momentum becomes a problem. To make a long story short, because of that momentum, I want to be a seller up here, but I have to be a little bit more patient, right? Let's put it that way. Put it more patient. So there are two places I'm looking for failures right now. One of them, my favorite spot for a failure, would be off this area of resistance. Now you'll notice I've got this trend line coming up, so I just want to make sure I'm not trading directly into that trend line. Sometimes you'll see trend lines that will look more like this, and you've really got to be careful with those, right? We're not having to deal with that problem right now. The only problem I have right now is that momentum. So my kind of favorite way to short this market for tomorrow is going to be looking for the short, again, focusing on a failure going back into that range, but waiting for the buyers here now to try twice, right? Waiting for those buyers to try once, waiting for those buyers to try twice, and then there's a couple different ways I can take this trade. In all reality, the easiest way to look at this is I can sell into the stops of those sellers, right? All the buyers, right? All the buyers who are trying to buy this pullback right now, right? Buyers trying once, buyers trying twice. I can simply take a sell order, drop it right below that low, and use that magnet below me, that range, to drag the market back down. Okay, that's one way I can do it. I can also, one of my favorites, is draw a trend line off those lows, trend line up off that high, and short the top of that channel. Okay, that's another way to do it. I can also grab a trap off of that high. In fact, these are probably the best. This is probably the best entries you're going to get, because you're selling nice and high on that failure. But that's what I'm looking for, right, off of that high. Now, I can also take a failure off the low, right? Remember, the key though is you want to make sure you're doing it at a support level below the trading range. Now, what's the problem going to be? Again, we get the range. The range is the magnet. But what's the problem now? Great location, but momentum's a big problem, right? So believe it or not, we're going to have to use the same basic idea here to buy off of that low. I want to buy low, sell high, and focus on failures. If I get down to that low now, great spot to be a buyer, but again, momentum's a problem. So what do? We give the bears the benefit of the doubt. We let them try once. We let them try twice. And again, right, do I simply buy into those stops? It's one option. Do I draw that trend line off those highs, off that low? A second option, right? Or do we get lucky and get that trap low, right, for that nice reversal off of that low. Again, focus on failures around the edges of that trading range. Those will be my two favorite ways to trade this market here for tomorrow. Now, how about breakouts, right? Failures are one thing. Breakouts are another. There are two ways I can look for a breakout right now. Let's talk about going higher. Now, as we go higher, remember, there's that big trading range overhead. So if this market takes off to the upside, it's not difficult to think we could easily make a run, not just up to that trading range, but possibly back to that big round. Now, there's a lot of open space above. Like I said, it's not difficult to see this as a bull long-term trend right now. So I'm not so worried about being a buyer, but I'm just not going to buy right now, not until I can break free of this trading range. There are two basic breakouts I'm looking for as we go higher. One would be a 1, 2, 3 breakout. Now think about how this thing will work, right? It'll poke its head higher, it'll pull back to the moving average, and it will jump off the moving average. Once I get that 1, 2, 3, again, we call these 1, 2, 3 breakouts, then I can find my new channel. I can mark up a high, I can mark up a low, and I can focus on buying off of that low, right? Now, the entry technique I'm going to use to buy off that low, the two most common entry setups are going to be what I call bear traps and seller failure patterns. Now, we've talked briefly about the failures. I haven't talked about traps here right now. I can't go over all the small details of this, but if you do want to get more of the small details of how we actually trigger those entries, what I'll do is I'll cover all those small details in the free trading course. I'll put a link up there for you guys in the upper right-hand corner. So it'll pop up there, right? Grab that link. And again, I'll be looking for that 1, 2, 3 breakout. I'm going to grab my channel, and I'm looking for any of my, again, I'm not going to go over all the entry techniques, right? My favorites, though, are bear traps, right, and seller failures off the low of that channel. And again, grab that free course I mentioned in the upper right-hand corner, and you'll see a lot of real examples of how we apply those setups to our favorite futures markets, right? So definitely grab that free course, but that would be where the failures, the trap entry triggers are coming in off of that low. Now, we may not get that deep pullback. The market may run higher here. We may see a shallow pullback and a higher high in price. Now, that is a second type of breakout pattern. Again, we call these 2-try breakouts. Okay, they're pretty simple. Strong move up, shallow pullback, higher high in price. When that happens, mark that low and be patient to wait for that pullback. Now, as I always remind you guys, you'll get extra bonus points for adding on a new channel off that high, off that low, and combining that entry off the low of that channel. It's not required, but it sure as hell doesn't hurt, right? Very, very good setup there. Again, that is kind of the second of my favorite breakout trades for tomorrow. What about the downside, though? Right? I don't want to figure the downside here. How do we short the downside? Well, first of all, what does a breakout look like at the downside? First things first is we have to take out these lows. Again, if I can get down to these lows here, I'm going to be looking for that failure back up into that trading range. Again, we'll talk more details of these specific entry techniques in the video class I mentioned earlier. But what's a breakout look like? A breakout has to get down to these lows. It has to hold this pullback and go. Once we can see those bears, A, hold that pullback, and B, really show some strength breaking free of this, what that will do is that will tell us we've now broken free of that trading range, and now we're looking for a continuation going lower. Now, as far as levels going lower here, I've got 41.23. And then there's a range from last week at 41, we'll call it 41.10, right? It's just to keep it simple though. But that 41.23 area is a prior major high. Got a big old range back there acting, you guessed it, as a magnet at 41.10 all the way down to 41.01 there. Now remember, you want to get proof though of this breakout, right? What I'm not going to look to do is I'm not going to take this thing lower and then try to sell that first pullback. Right? That pullback is a dangerous pullback to take. Again, if it was that easy, all of these would have held. Right? It's not as easy. It's not as easy as a strong move down, hold the pullback. A lot of times it runs right back up. So again, get it down to those lows, hold that pullback, right, and jump off of that moving average, right? Really separate out of that trading range. Then I can go out, I can mark up that low, I can mark up that high, and again, I can sell short off of that high, right? And again, I'm not blindly selling the top of that channel. I'm drilling down to a faster time frame, right? This is a 7,000 tick chart. I'll drill down to a 1,000 tick chart, a 1,500 tick chart, and I'll find my traps, right? We'll find those bull traps. We'll find those failure setups. And again, you'll learn more about those little setups I'm talking about, right, in the free video class that I mentioned earlier. All right, guys? So again, we're thinking failures. We're thinking breakouts. A lot of this is based on momentum, right? So just be careful timing the entries. Use those 2 tries I mentioned before to time the entries buying low and selling high. Let's keep going. S&P look great here for tomorrow. How about some Nasdaq? Now, Nasdaq is probably the more difficult one out of the 2 here. Again, much like the S&P, we have the bears in overall control right now. The range, I will definitely say, the range is there. You can definitely tell the market, rolls around instead of a range, spits itself out and comes back up again. You can definitely tell there is a range there. I don't think the range on the Nasdaq is as obvious and therefore as strong as the range on the S&P. The range on the S&P is difficult to miss. It's pretty clear. There's a lot of overlap here, right? If you look at a market profile on this one, it'd be all this volume is right there, right? So it's pretty obvious. When it comes to the Nasdaq, it's not as obvious. I think most people would say there was a range there, but in all reality, this could be just one big, strong bear trend right now, right? And again, I do understand the long-term trend might be higher right now. Again, right, you can see here, if I zoom out on this NASDAQ right now, it is not difficult. Again, it is not difficult to look at this and say, okay, right, there's one big leg up, right? There's two big legs up. This is just a pullback, right? That's all this is, right? It's a channel. There's your pullback. Again, I wouldn't argue with that whatsoever. I'm just not a long-term trader. And again, if I think about where this market might be trying to go here next, I put this that level on, and that now gives me another one of those kind of measured move objectives, right? So the buyers definitely have, again, long-term, maybe not long-term, medium-term, they definitely have that bullishness at their back right now. But when you zoom in on this and look closely at this, it's very difficult to call this a bull market. Now, the buyers definitely have some momentum on their side, right? You could definitely see this little short-term pullback, right? This is not a small pullback. This is definitely a strong pullback here. And I'm sure a lot of this has to do with the fact that it went underneath the range so far, and now it's rotating potentially the same amount, right, back up around these highs. So again, there's no disputing it is a medium-term bull trend. Short-term bearish, though. The range is probably not as clear and therefore as attractive or as strong, right, as the S&P. But we still got the bears, I think, in overall control here, at least for now. Whenever I see a trading range, I'm thinking what? I'm thinking failures and I'm thinking breakouts, right? Absolutely. So failures are always my bread and butter, right? Call them failures, call them reversals, whatever you want to call them. I like failures. Now, the ideal place to find a failure would be up around these highs, right? Above that 43 and really all the way up to that pendulum swing. That would be the best place to find a failure. Now, on the S&P, we talk about that trend line, right? So we do want to make sure that whatever we do up here, we clear underneath that trend line. Just kind of keep that in mind for tomorrow. And, a lot of this is the same thing that we talked about on the S&P, right? We are rotating off of that low. So even though I do want to be a seller, I've got to be careful getting too aggressive on the sell side, right? It's not like the market slammed lower, pulled back, the buyers are trying and they fail, right? I can be aggressive with those types of failure patterns. This one, I'm bouncing hard off that low. So long story short, I love to see a failure either up above the range or I know it sounds crazy, down below the low of this range. And if we're looking for it below the low of the range, it'll be because it's actually not a range, it's more of a trend. All right, I'll make sense of that here in a moment. So first things first here, I would love to see this thing pop up. Now, I can't really tell you how far it's going to pop up. I've got this channel I've marked up here. You could definitely kind of see that channel looks pretty good. It might even be a little bit tighter, right? We could be there right now for all I know, right? So I would love to see us pop up. And because that momentum is just going to be very strong at that point now, as I mentioned before, when I want to be a seller, but I'm worried about that rotation off the high, the best of a failure pattern I like to look for is what I call a nested failure, which is basically that two try, right? 1, 2, and just like I said on the S&P. Remember, think about that, right? All the buyers who are coming in now, their stops are just hanging out right below those lows. Right? You get all of this bearishness going lower. The range underneath you acting as a magnet. You're at resistance above the range. Sell that sucker, right? It's a great short setup. Again, once the buyers give me 2 tries, right? So the first one is I can sell short right into those stop losses. Or I can mark up that channel, one of my favorites, right? Mark that channel, find that channel or that trap, right? And short there. So again, failure patterns coming off the high of that range. This is a little more patient failure variation, again, because of the momentum, right, coming off of that low. Now, the second type of kind of failure pattern, I would say, right? It's not much of a failure, to be honest with you, but if we don't get that pop, right, if we don't get that pop going higher here, another thing I'm watching for is, again, because you could easily say, well, wait a second, that's your channel right there. And so therefore, this is just a trending environment, and I should be looking to sell short off the top of that channel, right? Big bear move down. The bears definitely want to hold that pullback. They want to take out those lows again. Right? And so, of course, knowing that is the case here right now, if we do see this market going lower, what's my challenge? My challenge is I don't want to trade inside the range. Now, I know. I said it earlier. I don't think the range is as obvious, and when things are not obvious, they're not as, consistent just because of the self-fulfilling prophecy. So I don't think that range is going to be as strong, which is why I'm definitely open-minded to a 2-try trap as the market rolls lower. Now, there's a good reason why I want this trap. One would be because I just don't want to sell low, and there's a lot of potential support here around those lows here. The second one is again, I do still want, because I'm below the range, I do still want those buyers to dig their own grave here, right? I really do. So I'm keeping an eye on that setup as we go lower. Right? Again, it's not really a failure setup. It's just if for some reason I don't get that pop that I want and the market takes off the downside, I don't want to chase it. I want to look for a trap entry. And traps are always my favorite whenever I'm worried about selling too low. And I do want to give the buyers, again, the benefit of the doubt here because of that range up overhead. Right? Basically, if we don't complete that pop higher and the market rolls over, it's a pretty good sign that this range is not as strong as we thought it was, and a retest of that low is very, very likely. So, of course, my second kind of favorite setup here would be, again, it's kind of a continuation trade rather than a failure trade, but I want to bring that up to you guys just so you know where that is for tomorrow. Then, how do I trade a failure off of this low, right? So again, we know to go up here, right, short off that high here. If we do make that range, if the market blows lower here, now you've really got to be concerned about that trading range actually being a range, right? It's more like a trend at this point. So again, on the S&P, I'm perfectly comfortable, right, buying off that low because the range is so obvious. On the Nasdaq, though, you got to really be careful on this one because, again, unless we get that move up and then back down again, unless we really take that, unless we pop up and then go back into that range, if the market simply rolls over and goes lower, this could again, the range may not actually be there. I don't want to beat this horse too much here right now, but the reality is the range may not be there. So if we do end up making that move lower, I'm going to have to break out what I call a crown reversal setup. Now, crown reversals are very similar to failures. The big difference, though, is they take a lot longer to trigger. Remember, at this point, if we do go lower here, and I still want to use that range as a magnet, I've got to first give the sellers 2 attempts to dig themselves a grave, right? Let them try once, let them try twice. The big deal, though, is these reversals are usually they usually take a lot longer to trigger. My favorite entry is that trap below that low. My second favorite, of course, is that hidden channel off that high, off that low right there, to buy off of that low. I'm going to warn you guys in this one, though, this pattern should not trigger in 5 minutes. It will probably take 20 to 30 minutes for this thing to turn and go back up right into that trading range. So that will be another kind of variation of a failure, again, using that range as a magnet. All right, so now we know how to trade those failures, and it's a range, right? And let's talk about breakouts. Now, when it comes to breakouts, very similar here as we talked about on the S&P. My big concern right now on the Nasdaq is this top up here, right? That 13,448 half. So if I see a strong move up, for example, if I see a pullback to the moving average, a strong breakthrough, I just got to be careful buying right into that high. It's kind of the one thing I'll be worried about here. I'd like to get that entry off that 1, 2, 3 reversal, right? Same thing we talked about on the S&P, right? So there's my range. If I want to call this a breakout, I've got to get a strong jump up. Not that strong, right? But strong enough to break higher. Then the key is you want to see the strength come in off the moving average. If the buyers can show us that strength, right, and get that jump off the EMA, 9 times out of 10, that range below us has now lost its strength. And now, for whatever reason, again, we talked about this earlier, right? The buyers are obviously in control in the long term. This will give that short-term control back to them. My main challenge, though, is that high up there. I'm going to mark those highs. I'm going to mark that low. And again, I'd like to get into this thing, right, either with a bear trap off that low or a seller failure off that low, ideally before we get back up to retest that high. Now, let's say we don't, right? Let's say the market rips higher here in the overnight. We race higher here. That's when you want to look for those traps, right? So if they do take out those highs on strength, strong move up, shallow pullback, higher high in price, that is exactly the scenario where a trap is going to be your best friend, right? Now, we're going to have to pay attention to that tomorrow morning as we get there. We'll obviously do all this later tomorrow morning in a trade room, but that is something I'm on my radar here for tomorrow. Watch out buying into that major high there. And then going lower is the easy one, right? Again, like the S&P, right? If we can take out, again, we don't need to take out the lows. We got to get down inside these lows here. Get these bears to hold that pullback and break out from there. Again, 1, 2, 3 breakout, mark that low, mark that high, and then it's on, right? We can easily get short off the top of that new channel. Now, keep in mind, right, again, I'm just simply drawing on the screen right now. You get this big wide open space down there, right? 13,000. I mean, again, the market was so bullish into the end of last week, right? It would be easy to think this range is a magnet, big round numbers a magnet. So if it rolls over here, I mean, if we really get lucky here, right, we'll get that failure off the high into that 1, 2, 3 breakdown, mark that low, mark that high, right, and short off the high of that channel, right? Again, I'm not going to sell into the low, but I have no problem shorting that 1, 2, 3 breakout or 1, 2, 3 reversal, whatever you want to call it in this example. It's a 1, 2, 3 move, right? So that will be the next of a breakout pattern we're looking for, right? Strong move down, pull back to the moving average. Remember, it's not the strength of this leg, it's the strength of the blast leg, right? It's that leg that makes the difference there. Mark up that low, mark up that high. Again, looking for bull traps, looking for buyer failures, looking for any of my favorite entry setups to talk about, right, in that free video course that I mentioned in the upper right-hand corner, right? So make sure you grab that link that popped up there earlier, hit the little information icon and get registered for the free course. That way you'll know exactly what I'm talking about when I say 1, 2, 3 breakout into hidden channel pullback. So failures, right? Failures and breakouts on our radar on the Nasdaq. I'm sure there are a couple things that I'll miss tonight, so we'll make sure we go over more of that tomorrow, but that's kind of the basic plan for the Nasdaq on Tuesday. Next up here, how about some gold? So relatively simple, straightforward, the Nasdaq. I think a little more potential to the downside in the Nasdaq than the S&P right now. Let's go look at the gold here. So gold is kind of the opposite of the Eminis, right? Gold is not a range-bound market. Gold is a trending market. When I think trends, I think about continuations, right, or pullbacks, or retracements, right? And I think about reversals. And there are 3 types of reversals that we'll talk about here in this video. Now, everything is pretty bullish, as you can see right now on the gold right now, right? We had that strong breakout, a little gap of the weekend. They pull back, fill the gap, and they blast, right? Now, in my trade room, we love these moves, right? These kind of 1, 2, 3 moves here. Because we can simply mark up these highs, mark up these lows, right, and find that big channel. I don't think that channel, though, is going to be the right channel. It's just too far of a pullback right now. So what I did was I draw my channel off those highs, off that low, and this is my sweet spot here, right, for tomorrow. So again, the market is bullish. There is no doubt about that. We get a nice big block of resistance acting as targets overhead, 1881 up to 1891. And the buyers, we trying to finish off that move, getting up to that 1891 area. So I'm thinking about buying a pullback. Right, it's a trend. I would also be open-minded to a reversal as well. So my goal right now is I want to find levels of support and buy levels of support. You'll notice I've taken the size of this leg and kind of anticipated, right, where that next measured move will be. At this point, I'm very much just kind of, I'm speculating at this point, right? It might be a little bit higher. Once we know how far it pulls back, then we'll know kind of where that measured move is going to be. You'll notice, too, I put the word open loop on the highs here, right? Open loops, in my vocabulary, an open loop is a strong move. It's almost like unfinished business, right? So anytime I see a strong move like this, it's almost a guarantee we get back up to retest the high. Now, we may not keep going. The market may run to those highs and then come crashing back down again. But anytime I see a real strong, again, I call them open loop moves. Anytime I see a real strong move, the odds are very good they retest the high. And again, maybe they'll keep going, maybe they won't. But we know that open loop moves almost guarantee a retest of the high or the low, depending on who made the open loop. So that is definitely something on my radar. And it definitely tells me very careful before I try to get short on this. So how do I buy the pullback right now, right? That's the big $1,000 question here for tomorrow. I'd like to get down underneath that 62.9 and somewhere above that 59.1 area. Ideally, I'd like to see us pull back into the low of that channel, but I'll be honest, we don't really, that channel's great. It's just, we may not get that pullback down to the low of this channel because it looks more like a spiking channel, right, going higher. And all we really need for a spiking channel is to pull back into the base of that channel. So trading pullbacks, right? My favorite way to trade a pullback, especially in a strong move higher like this, is to wait for price to get down underneath some of these prior swings, see if I can get those bears to come in and get short off the moving average, and then simply use those stop losses like I do on failures as fuel and literally buy into stop losses. Now, those patterns will usually turn into a pullback combination. So this is kind of what I was looking for here at this as the market pulls back, right? If it pulls back for us, anticipate now those bears coming in and trying to get short. Right? Once they do get short, now you know right where their pain is, right? Now you know right where the bears go. Get me out of this thing. I don't want to be short anymore. And the bears will get stopped out of their short positions. I can buy into those stops, and I can then use that quick pullback setup for what I call a pullback into failure. Sorry, the backwards, right? Apparently today's backwards day. Failure into pullback combination. It is a Monday evening after all, right? It was a busy weekend. It definitely was. So we had the failures, right, into the pullback combination. again, you'll see a lot of these, right? You'll see a lot of these, right? They'll pull back. The bears, of course, think they're now reversing. It's not a reversal. Remember, there's an open loop up there. Such a strong move higher. The odds are very good. Those bears will fail, get that pullback, failure into pullback combination, right, as we go. Now, I should also mention, too, there is this prior swing back here, and I almost made this buy zone even bigger. Now, be aware, if we do get this really deep pullback now, there's a good chance here that buyers will still want to buy this. It's just think about the same type of failure pattern we talked about earlier in the Eminis, right? Let them try twice here now. Once, twice. Again, I can buy the stops. I can buy the trend line. I can buy that trap. You know what I mean? These are great setups. This one is more like it's more like a range bound setup because you're concerned about the momentum, right? Again, I still want to be a buyer on this. I still think the buyers have the right, or the odds are in their favor to going back to retest the highs. The challenge, though, is on a deeper pullback, just give those bears a couple tries here and then hit them, right, going back up to retest the high, right? Does that make sense? Right? Give me a thumbs up tonight if you're still watching this video right now. By the way, if you're watching this video right now, 40 minutes of this video, congratulations. By the way, very, very well done. Hit that thumbs up button, though, if you're enjoying this video so far. And make sure you subscribe, too, because I don't want you to miss tomorrow night's video as well. So, again, it's a shallow pullback, right? It's a shallow pullback, which would be a failure to pullback combination, or a deep pullback, which is that nested failure. And then keep in mind, too, these will oftentimes run higher, and they'll give you some trap entries on the way back up to retest the high, right? So think about, again, a nested failure, right? Two-try failure, bears once, bears twice, into a trap entry, okay? Failure into pullback combination, all right? Again, we'll talk more about failures. We'll talk more about trap entries. We'll talk all those small details, right, in the free video class, again, linked up in the upper right-hand corner. Now, how about a reversal, right? We got pullbacks here. Oh, and I should mention, too, if the market does keep going higher, same thing, right? I'm waiting for that pullback. I'm waiting for that, right? Same basic idea if the market keeps on grinding higher here. How do we trade a reversal? There are three basic types of reversals. The one that is kind of the easiest to learn is that 1, 2, 3 reversal pattern, right? It kind of rips the control out of the hands of the bulls, right? The 1, 2, 3 reversal, mark up that low, mark up that high, and I always want that first test, right? I always want to short that first test. The first test is always the best test. Again, I'll drill down to a faster time frame, like a 377 tick on the gold, and look for the entry trigger. It'll usually be either a buyer failure or a bull trap off that high. I'm not going to go into those details right now, but you'll learn more about that in the free video class I keep talking about, linked up in the description. Okay, where's my target in that situation? Back down to retest those lows, right? It's an easy target. Okay, that's one type of reversal I'm looking for. Another type of reversal is what I would call a bounce reversal, which basically means we do get the pullback off the low, we go up, we take out that high, and now we go 1, 2, go, right? So basically the buyers, right? The buyers get their buy, we take out those highs, and we bounce off of that high with that 1, 2, 3 reversal, right? Same idea. Mark up that low, mark up that high, short that first pullback. Okay? These are very similar to those 1, 2, 3 reversals, but again, I call them bounce reversals because again, they kind of double top off the high. Now, am I going to short the highs? Of course not, right? Not at least in this example. Right, but once I see this thing turn 1, 2, 3, absolutely, then I can definitely short. In fact, my job is to short off the high of that new channel, right? Love those bounce reversals. And then last but not least is that crown reversal. Okay, these are a little bit tricky. What you want to remember is the bigger the move, the wider the reversal, right? You want to see buyers try once, you want to see buyers try twice, and grab that trap, right, off the high. Again, these do take some patience because whenever you see a really big move up like this, you're not going to want to try to grab the little tiny reversal pattern, right? Chances are it's going to come right and run you back out again. So what you want to do is you want to wait for those buyers try once, go lower low, try twice, right? Draw that trend line, find that channel, but really try to get that trap, right? That trap is the key to success, right? That trap of that high, that's the key to a good crown reversal right off of that high. All right, guys? So you guys have a pretty good idea now of where I would like to grab some reversals, right? So we're trading pullbacks or continuations in trending markets, and we're keeping our eyes open for those three types of reversal patterns. All right, guys, we're looking pretty good here right now. Gold looks great for tomorrow. They all look pretty good for tomorrow. Each one of them have very good setups on our radar, and I hope I'll see you tomorrow morning and we can trade this stuff together. Now, like I mentioned earlier, I'll put all of the membership links you guys need. I'll put all of that in the description of this YouTube video. If you're on the blog right now at Sideways Markets, I'll put a big button for you guys right below me tonight on the trading blog. So grab that link, get registered as a new member, and I'll see you tomorrow at 8 a.m. Eastern time. Also, don't forget too, I'm only a phone call away. If you have any questions for me, don't be afraid to call that toll-free phone number there. I'm also available on live chat on the left, live chat on the right, and you can always drop a question in the comment section here as well. But guys and gals, that'll wrap things up here for me on this video newsletter. Hope you guys learned a lot. Hope you use it to crush the markets tomorrow. And hopefully I'll see you tomorrow morning at the opening bell every morning, 8 o'clock in our trade room. It's only for advanced members. Make sure you get registered as a new member, and I'll see you tomorrow morning, and we'll do it all together. But again, don't be a stranger. Keep in touch. Drop me some comments in the comment section below. Fire off an email. Call the office. I would love to help you. Even if our trade room isn't a good fit right now, don't be shy. I can always kind of point in the right direction with the right computers, the right charts, the right data, and everything you'll need to be ready for later on in the month of May. But that's it for me, guys. Have a wonderful rest of your day out there. Rest up. Big day coming tomorrow. I look forward to seeing you guys next time on the next edition of our nightly newsletter. As always, be well out there. Be nice to each other, will ya? And be here next time, will ya? Adios, amigos. Bye-bye for now.